When you see someone making $392,000 trading in a single month, it's easy to assume they've unlocked some hidden formula, or that they've got some secret that you don't. But this guy right here, he makes it very clear. There's no magic involved, just brutal honesty. One very important change that he made to his strategy and a mindset that radically shifted his results, leading to his highest earning of his entire career. And here's the thing, he's been posting his monthly trading recaps every single month for the past 5 years. Do you have that kind of discipline? Do you have that kind of willingness to criticize yourself and your own performance? This wasn't just luck. This was his best month ever after years of hard work. So let's break down his process. Let's see what made this month different. And most importantly, let me help you find ways of applying these lessons to your own trading. $392,886 in a single month.
If I could guess, when another trader would see that kind of month I'm having, they might think like, oh my gosh, what is he doing? What special strategy does he have? Like, what edge is he doing? And it's the same thing. I'm just approaching 2025 with a much more serious and committed approach to sizing up very seriously.
We've got mindset shift, risk management, key metrics, key setups, risk management, and continuous improvement, okay? So starting with the mindset shifts, notice he's saying that he committed to taking his trading more seriously. Now, my question for you, how seriously are you committed to your own trading? Is it 1 out of 10? Is it 10 out of 10? I'm willing to bet it's not a 10 out of 10.
But really, it's because I've gone from maybe risking 5 or 6K in the trade to then willing to risk 10 to 15K in the trade, and the risk reward is the same. And if I make 2 or 3 to 1, all of a sudden I'm making 50K on what I deem to be, slightly above average trade. And 50K becomes now, almost like not an average gain, but it's certainly starting to feel like it. And so,
okay, so what I see there is that he's willing to face fears. Now, trading makes you face fears. And if you don't face your fears in trading, you don't last. Point blank, period. So he's focusing on discipline and consistent risk management, and he's increased his willingness to size up significantly. What that takes is courage. He didn't say it, but you can hear it. It takes courage, okay? So he was willing to be more courageous and put more at risk. Now, how much are you willing to risk to succeed in trading? That's a question to think about.
I know the average gain is 10K and the average loss is 5K. But again, the average is always skewed because most of my losses, if I took a full size loss, it was really actually closer to 8 or 9K. And again, you'll notice some winners here, or some of the smaller winners throughout this month, which I actually really don't go over because they're kind of scratches. I don't really learn much from them. But they bring the average down because really the trades that brought me to this total were always in the 20, 30, 40, 50K range. And so without further ado, let's go into it. The one last thing I want to talk about for the trades is you'll notice the win rate's 83%. That is insanely high for me. That is well over 20% higher than what my career average is.
83% win rate. And he's saying it's 20% higher than usual, okay? That's an unusually high win rate, especially for the kind of trading he's doing. But what I want to point out is that he knows it's unusually high. So instead of him saying, oh, yeah, my win rate's now 83%, he's like, that's kind of an outlier, which is very, very smart.
I will, attest to that like I only took, 9 losers this month, which is insanely low. Normally I'm taking at least 15, 20 plus.
Okay, so what's the point? The point is he knows what's normal, and he's not letting a high win rate 1 month completely mess with his notion of what he knows is within a normal range, normal standard deviation range, okay? There's something called standard deviations, right? And so he knows what is his normal, and he knows this is an outlier, and so he's not necessarily expecting it to continue in the former months. But notice, he's still generating $392,000, and he's saying, okay, I'm still just executing my same process, wash, rinse, repeat. He's making these small tweaks, which can really significantly change your results if you are careful enough.
So that helped a lot too. I would imagine if I took the amount of average losers or the number of losers, this probably would have been more towards like 300. So still an incredible month nonetheless, but like the so few and far between losers obviously did help this tremendously. So
now let's get into his risk management strategies. Already he mentioned he's increased his risk per trade from 5 to 6K to now 10 to 15K. Now that's a big jump. So he doubled the risk that he was willing to take per trade. However, he kept his risk to reward ratio the same. Okay, so instead of doing this in a reckless way, like Danny trades, or someone who doesn't really know what they're doing with a negative average profitability per trade, what he's doing instead is he's maintaining a positive risk to reward ratio. In fact, it's excellent, 2-to-1 or 3-to-1. And he's making sure that although he's increasing his risk, he's managing those losses so that the average losses are significantly smaller. In fact, 2 to 3 times smaller than his average wins. Increased risk per trade from 5 to 10K. And then his average gains were 20 to 50K. Do you see how that math works out? That's called a positive average profitability per trade, or positive expectancy, which is the opposite of what Danny Trades showed, showing a negative $200. Expectancy is the most important metric in trading if you're new. You need to know this, which means on average, when you place a trade, how much do you make? And if that number is negative, you are not a profitable trader. If that number is positive, you are a profitable trader. And the way to tell is to look at your average wins and your average losses and add in your win rate, and then you get your expectancy.
QNCCF here is one that kind of was a blast from the past, one that, runs up 1, 2, 3, 4, 5, 6, 7, practically 8 days in a row. And I forget if there was news out or something happened, but I mean, this just got clobbered. And
just for clarity, he's calling these OTCs. If you don't trade stocks, I'd actually learn what this is, but OTC are stocks that don't trade on the regular stock exchanges like the NASDAQ, but it's still stocks and it's still charts.
And so it offered a very, very good panic dip buy. I don't think we can show it, so let me just pull up. Well, I can, but not on the monthly.
Okay, he mentioned one of his trades. Okay, so we're going to break this down and make sure that you guys are following. He's got some key setups here. So we're skipping to key setups, okay? So he mentioned a panic dip buy. Now, what's a panic dip buy? It's just a pullback trade, okay? It's buying a pullback for a quick bounce. So that's the panic dip buy. And he's got a total of 5 that I was able to count, 5 key setups. So we'll go into every single one of them and give you just a basic idea of what he's doing.
Chart. Let me pull up through the daily or the intraday. So yeah, I mean, out of nowhere, this panic just in what looks like about 10 candles goes from practically 150 to 60. So a massive, massive panic. And again, this is a kind of panic where I actually started getting interested for a bounce play. Now, you'll notice there was a small green candle where the biggest volume got put in. Typically, that is a sign of a bottom or a bottoming, but it's not always foolproof. And so I did buy some there, but then did take a loss because it went lower. And then quickly after just a couple more minutes of selling, the real bottom came and the bounce really started. And so I did take a loss and then recoup back my losses. However, I call it being rusty because I sold, I think my best was selling like at 90 cents, went all the way to almost 110. So quite early on the sells. If we look at here, yeah, this is the screenshot of just like the E-Trade transactions I had. So like I said, bought once, stopped out when it had that little green candle and then went lower to low day. Got in right before that pop, right? If you look at better on here when we zoom in, right before this pop that actually got the real bounce to start. And then, like I said, sold way too early, well before the real speed up of the bounce happened. And so,
okay, that this is a bull trend, okay, on this chart, which would mean that this whatever we're looking at here, okay, QNCCF has been trending up over a very long period of time and then suddenly had a huge drop, okay? But if you zoom out overall, we can likely assume that there was a greater bull trend and that what he got here was essentially, if you zoom out, what this was on a higher time frame was a pullback of that larger bull trend, okay? So it's essentially entering on a pullback in a bull trend.
Only locked in about like 2 to 3K on the long, which again, sounds good. But again, considering, I mean, gosh, if I was not as rusty on this, if these were still happening frequently, I will say there is a little bit of scalability problem because it does get difficult if you're too big of size when in terms of cutting the losses. But, there were plenty of 5, 10, 15K dip buy winners back in 2021. So a little bit rusty on the sizing and on the patience. But then once the bounces got too much or too overdone too soon, we down bounced from 66 all the way to 108, almost 110 area. That's when I did decide to get short and get for a pullback. So I did start in short. Again, I also didn't do much size because I thought there was a chance this could bounce to 110, 115, 120, maybe in an extreme case, get up to this red-green level.
Okay, so he's trading the 1-minute chart. We can see that here. So if you look at this is about 50% of this move, right? If we take the move from here to here, this is right somewhere around the midpoint here, okay? Now, this is a 50% pullback of this bear trend. So before I said a greater bull trend, but he's saying like on a shorter time frame this is a bear trend because it is, and then he's looking to enter short after that 50% pullback for continuation to the downside and then getting out real quick.
The bottom, but when we went to like the 90s, I said, okay, that's a pretty good move. I would not expect this to go back down to low days, but turns out it actually did tap, I think, the high 70s. So left it on the table, but again, locked another 3K there. So all in all, was up around 6K or so on the day just from this ticker alone.
Okay, so again, big breakout to the downside, a pullback to about 50%, more or less, and then entering after he sees evidence of selling for trend continuation down, getting out with a quick profit.
So that was a good start. And I just, I briefly mentioned not because of the gain per se, but because of, this is it. This is the panic and the dip buy. I shouldn't say the panic dip because I missed the panic on the short side, but early, call it 2017, 2018, 2019, like this was it. I would be short for this panic. I'd be covering and I'd be flipping the bounce, right? Maybe shorting the bounce if I was already PDT at the time, but certainly under the PDT, it was like, I'm in the panic, I'm dip buying it, and that's it for the week pretty much. So really cool to see that happen after so many years, especially since it really hasn't happened. This kind of move hasn't happened since like 2021. So it's been some time, which is cool to see. But other than that, TGL here, we're going to go over a couple gap and craps this month, but again, they weren't, a huge part of my month.
Okay, so the thing I want to point out is that he knows what an A+ setup looks like. Now, remember yesterday, we talked about trades by Matt, and we talked about how he patiently waits for A+ setups. And that's his biggest edge and his biggest advantage in the market, is that he patiently waits for A+ setups. And if you want to watch the rest of the trades by Matt video, we break down in detail how he made $309,000 trading. It is a masterclass on extraordinary level discipline and patience. You can click the link to go do that right here. When it comes to his execution tactics here, right, he focuses on these key setups. Okay, he focuses on those. So the thing is, you got to know what your best setups are. And then you have to be able to identify them in real time and then really get in and not hesitate. And he knows how to do that, and he knows how to do that well, and that's clear.
If I had to guess, I haven't checked yet, but I would assume they're in the strong, healthy 5-figure range. So certainly a portion of it. But like I said, I had 9 losers. I think about probably half of those were actually from gap and crap. So you could argue if I wanted to be, almost perfect with no red days and a massive win streak, a lot of losers were gap and craps. But again, gap and craps still were profitable. Or still the reason I was profitable, and so actually
So he's talking about a gap and crap strategy, and a gap and crap strategy is shorting stocks that gap up on weak news, okay? So you have a gap up, and then you're assuming that breakout to the upside, because that's what a gap up is going to fail, and you would short that, betting that it was going to reverse back down, right? And the key signals that he looks for: early strength that fails, break of morning lows, and he looks to fade throughout the day.
But again, if you know how I trade gap and crap, especially if you're in the clover room, it's the same old thing every day, just same process, different tickers, waiting for just a lower, some kind of break. And at first it looks like a chase, but then by the end of the day, when it really fades, which in this case TGL did, it looked really good. So if we just pull up the chart here, TGL shorted what I think was that first significant lower day put in, right? If we just zoom in more closely, right, kind of tried to bounce, but none of these really bottoms convinced me just yet. Once we actually put in a bottom that held for at least a few minutes, then we finally cracked, and this was kind of I wouldn't call it a momentum shift in foresight, but hindsight, it looks like obviously it was. But like I said, got short on that lower day, chopped around for a little bit, an hour or two, and then really started to collapse by late day, and then by the close, it was down below.
Okay, so he got short here. That's why it's red. And then he bought back his shorts here. That's why it's green. Okay, so entry here, hold for that move down, exit after we make a bottom and start moving back up. Solid trade.
Over 50% off the opening price. So locked in like 8K there. So that was a cool one. Those were really only the main trades that I remember from, or really got something out of, I should say, from these 2 days. Because honestly, and I remember looking at these 2 days, there was no big particular gain on 24K and the 16K. It was like a bunch of 3, 4, 5, 6, 8K winners. There was nothing huge. There were just 3, 4 winners each day, and it led it up to a really good start to the year. So
we're starting to see a theme with this guy, right? Consistency. How consistently are you executing your process? How consistently are you executing your rules and procedures? How clearly have you articulated your rules and procedures? And how much accountability and how willing are you to assess your performance and see how consistently you're performing with those said rules and procedures? Something to think about.
That was cool. Now, obviously, week 2 and week 3 were the real winners. And this is where the biggest gains of the months come from. And they're going to be, I think, 2 or 3 tickers in particular that really were the, the massive portions. This one being the massive, or not massivest, the biggest, Fannie Mae. Also OTC, but in a sense, a little bit different, because if you know Fannie Mae, this is, Fannie Mae and Freddie Mac. This is like the largest mortgage-backed securities company, in America, arguably. And so even though they're on the OTC, they give you the characteristics of OTCs, why I love trading Fannie Mae. But again, it's not your typical scam, right? It's not some OTC turd that's going to go to zero in however many months or years.
Okay, so pop quiz, because I'm here for you to learn. I'm here for you to get some breakthrough in your trading performance. So I want to make sure that you're here to learn as well. So I got a pop quiz question for you to see if you've been listening. What's the key shift in mindset that this trader made in 2025 that contributed to his record month. Okay. What was the one shift that he mentioned at the very beginning of the video? Put your answer in the comments right now. Put your answer in the comments right now.
The fundamental driver behind it, I think, allowed me to really profit on it well, both on the long side and the short side. And it really started back here, right? I didn't really make much money on this breakout here, but this breakout started because President Trump got elected, right? He won the election, and people were already longing in anticipation of the idea that he wants to take Fannie Mae out of conservatorship. Again, we've also made a more in-depth video lesson on, or not video lesson, but a YouTube video on this on the Clover channel, which I could probably link in the description, make it easy for you guys to find it. But let's just talk about what I'm saying, which is Trump and the Trump administration want to exit Fannie Mae and Freddie Mac out of conservatorship. If that happens, they are going to be worth much more than where they're currently trading at today. Again, it's a big if. It's probably a multi-year if down the road. But nonetheless, he gets elected, it runs up. Pulls back, consolidates, people kind of forget about it. And then Bill Ackman puts out a tweet that he is also long with his hedge fund. In fact, I think he mentioned he had been long for almost a decade. I mean, he was long, if we go back from let's go 10 years back. He was probably accumulating all throughout this period, because I think he mentioned he only has like a mid twos average. So really he was accumulating pretty early on, whereas if you were perfect, I mean, you could have got an average down to 50 cents. But nonetheless, he tweets about it, just talking about his thesis and why I think it's super likely, and that just gained a ton of attention to start this run. Now, I remember making a little bit of money on the tweet. I wasn't right there right away, but I did flip it overnight for a small gain. But with the real winners when they started coming was when this actual breakout over the mid threes happened. So the first one, I believe, and forgive me, there's going to be like probably 5 to 7 trades on Fannie Mae here. But again, of the 390,000, if I remember correctly, I think it's like well over half is Fannie Mae. So multiple different trades. So the first breakout over 366 or 367 or whatever it was, if we have it here. Yeah, right at the open, it broke out. And I did buy my shares I had 2 E-Trade accounts.
Okay, so he's buying breakouts, right? You can get lost in all of the language. There's a lot of complicated, tricky language that there is in trading, right? But notice, he's just buying a breakout. Right, he's buying a bull breakout to the long side. So key indicators, he's looking for volume confirmation. He's looking for consolidation after a breakout. And he's looking for a strong fundamental catalyst like political events or news. Now, he mentioned that he saw a catalyst, okay, and that was something political, right? And then there was also this big trader that was announcing that they had a long position, okay? So those are all things that you can use to indicate the likelihood increasing of that bull breakout, but it's essentially just a bull breakout, okay? He's buying here with the expectation that the price will go up, and it looks like he bought here and he sold up here.
The time, so I have a Roth and then I have a regular brokerage account, but both in those, or bought Fannie Mae in both those accounts right off the breakout. And so right away it works beautifully. And then it starts consolidating really well, above 4 in the low 4s. And I remember thinking to myself, why didn't I buy more? Like, I knew how good this breakout would be, given the catalyst, given the reasoning behind it, given the fact that if you've even traded Fannie Mae enough times, like I have, I mean, every breakout usually has a very good chance of success. I mean, I remember buying this breakout, making money. I bought this and made money. I bought this breakout and made money. I think I tried again. I attempted to buy this breakout, and I think I lost money because it got choppy. But out of, I'm like 4 for 5 now, or 3 for 4 on the breakouts here. So,
okay, so if you look at this chart, okay, is this chart in an uptrend or a downtrend? It's obviously in an uptrend, right? We were kind of flat here, and then we start trending up, and then we have a pullback here, and we go sideways, but then we break out to the upside, break out to the upside, break out to the upside. Okay, so there's a lot of buyers. That's what you can see, and so he's waiting for a breakout for trend continuation. So it's a breakout, but it's a breakout within an already bullish trend, which means essentially a pullback.
I already felt really good about it. And when I looked back at it consolidating midday, I just thought to myself, I was like, you should have bought more. But not only should I have bought more, I still thought to myself, hey, there's still a chance to buy more. So I didn't sell any of my E-Trade shares. And then I actually bought more in a more bigger account like my center point. Let's get rid of that one. I don't think that's here. Breakout sells. So yeah, unfortunately, I'm actually upset with myself that I didn't take a picture of here. But once it started getting and peaking over this like 430 line, like if I could just draw it right here, of course it dipped a little bit below, but once it kind of came back and held, it actually closed right at the highs of the day into the close.
Okay, so notice the price is testing down here, and then it's failing to break out to the downside, and then reversing up, making a higher low. So this was the low previously. Now this is the new low, which means we've got a higher low, which means we have a indication of bullishness.
Gapped up, sold into the morning spike into $5. And all in all, I also then sold the E-Trade shares. Like you see those shares being sold there. Between both E-Trade accounts and the center point account, I locked in like 53 grand. So
okay, amazing. Cha-ching, right? You bought down here, and then he sold up here. Nice, nice.
Very, very, very big winner on the breakout side. It's not every day or really ever I'm making that much money on the long side. Only who knows how much I would have made had I actually taken the breakout a little more serious in terms of sizing earlier on and actually taken more buying power from my center point account and used it to buy this. And the reason why you might be asking, like, why did you only buy with E-Trade and not center point, or why did you not have the size you wanted from E-Trade? Typically, again, I'm not the strongest long bias trader, and so my E-Trade accounts, which are mostly long biased, didn't have as much money in them, right? I'm trading with at least $500,000, if not close to $1 million short account or a short.
Okay, so we see here that he's got bull breakouts locked down, right? He's also got shorting parabolic moves, which we'll get to in a second. We already covered the panic dip buy. And then we also have this first red day setup as well as the gap and crap. But we did cover the gap and crap, okay? So let's keep going and see what's next.
This pullback, it didn't seem all that predictable to me. I would have much rather have had it closed up there and then did this the next morning. So when it did late day, I wasn't a part of this in any way, shape, or form. So
look at that. He got out almost at the very, very tippy top, which is amazing.
Up next, before we go over more Fannie Mae, FFI we'll get to, I want to talk about really quick the Xtia. This was a very cool ticker or trade that had just a ton of range. And I think some people would call this obviously a gap and crap. And granted, now it's not trading at 48 bucks. At the time, it was at 20 cents because they did a massive like 200 for one reverse split. So now back at $5 or $4, but really it's probably like less than a penny. Most people would probably call this a gap and crap, and I would agree with that. However, I think what made this really, really sweet is the fact that it already ran a day before, right? Most gap and craps, at least for how I like to trade them, is like it's day one, right? It is the first day with news. This one was not day one. This one had an amazing gap up. I actually contemplated on taking this long overnight, not because I thought it was good, but because sometimes the crappiest of tickers just run really, really well. So if we go to the monthly, let's see if we can get it. Yeah, perfectly. Last day here. I remember contemplating it, but by the time I wanted to pull the trigger in after hours, it was just way too late. As you can see here, even before after hours, like it just ramped into the close. And so I remember actually, I think this 16 level was more like 5 or 6 cents. And so by the time I got to the close, I was like, there's no way I chase this. But then even then, that wouldn't have technically been a chase in hindsight. And so went much higher from there. But again, for those of you who know who Xtia is as a company, without getting too deep in the fundamentals, I mean, they were in a very tough and bad situation. Not only fundamentally, but from a dilutive perspective. And so going into today, I knew, given how big the gap up was, given their situation, it was going to be incredibly difficult for them to hold their gains. And so that's why you see me pretty much getting pretty aggressively short out the open. I mean, even at the morning spot.
Okay, interesting. So he's looking for a gap up. So this is the gap and crap strategy. Shorting stocks that gap up big on weak news, okay? And these are the key signals. Early strength that fails. This is the main thing. Okay, early strength that fails. And what is this? Another way of saying this is a failed breakout. Okay, so the price is trying to break out to the upside, but because it's so extreme, he's like, you know what? It probably doesn't last, which is a predictable thing if it's that extreme, because anything in the markets that's a really extreme is not sustainable. Extreme is not sustainable. That's worth writing down. Extreme is not sustainable. So he does that, and then he's like continuing to enter short throughout the day. So he gets in up here, right? Now the gap up's over here, so you don't see that. This is the 1 minute chart, okay? So he's using a longer time frame, and then he's using top-down analysis and coming in, and then using the 1 minute chart for very precise entries, which we've talked about on this channel before. So then he's getting short. Those are the red arrows. And then he's holding until we make 1, 2, 3 moves down near this prior low, and then exiting here. And then it looks like he left some runners and held, looks like until the end of the day.
Like, I really had very little fear here. Of course, I had a risk level in mind. I thought this thing could have...
So another way of saying that is like when you have a gap up, gaps often get filled, okay? So if there's a gap up, that means the price is opening the next day much higher than it was the previous day. And what you have then is a gap, okay? And then often what happens is the market comes back down to close or test that gap. And so he's just profiting by shorting on that gap getting filled.
Probably got at least a 25, maybe 30 if it got a little insane. But I thought once the momentum or the early strength out the open ended, like this is going to get crushed. Now, it got crushed much more than I thought. I thought maybe it could get to like this 10-cent range like I thought, which it did fairly early on. But the reason why I kept holding, and I actually held into after hours, was just kind of a little bit of luck. One was the fact that worked in my favor was that they announced they're doing a reverse split. And so that's what made it drop midday like this. And that in and of itself was good enough for me to hold it and give it a little more time, because we've seen a lot of reverse splits happen recently and a lot of crappy tickers. And again, it's never really bullish or ever to do a reverse split. And I think the market sentiment really has rewarded that in a sense for short selling. So, and not necessarily reward short selling, but just has punished longs. Probably a better way to put it, because there's really no positives that come out of it. And so when we closed at 10 cents or like 11 cents here, I thought to myself, let me just...
Frank said often, but not always. Very true, Frank. Very true, Frank. I appreciate that. So yeah, the gaps get filled often, but not always.
give it some time, given the fact that I've seen some of these fade really, really well after reverse splits. And lo and behold, I just got lucky that the very minute into the close, they did an offering. So what turned out to be something I wanted to fade maybe towards like 10 cents or 8 or 9 cents down here, it actually went below red green and actually got crushed down to 8 cents, 7 cents, and then 6 cents, where I covered the rest for a, 24 grand trade. So really good. Again, not the biggest gain you're going to see from me this month, but I'm just really stoked about it because you got to remember also with such a low price 20-cent ticker, the 250 rule played a role. Had it not, I could have had much more dollar size on the actual trade, but given...
What I want to point out is that he got short here, so this is his first entry, right? And then notice the price went his way, but then it went against him. So now he's in the negative. And what he was able to do is wait until the price started to go his way again and then start adding to his position, which is really smart.
That I have to take my share size times 250 and takes a lot of buying power away. I didn't have nearly as much as I maybe could have, but again, to make that kind of a gain on such big range of a small price sticker was definitely one of the more of my favorite trades from this month. So that was really, really cool. Now, next one is Ffie. We've talked about the ticker plenty from my biggest loss back in May. Certainly talk about, I think, quite a bit from the swing trading ideas I had on it, especially, into this move and then into the fade back down to the 2s and 1s. Now, eventually, I think it was this day. I think it was my November recap. I talked about how I covered finally when it made a new weekly high. You can't see it because it's only a daily chart here, but that was a new weekly high technically, and so I covered, went a little bit lower and actually supported one pretty well and has not gone lower since. And again, regardless that I covered it at 150 and then missed out on the downside, that doesn't matter to me because I knew it was a high likely chance that over time, at some point, there's going to be another one of these, right? I don't know when, I don't know even if, but if it happens, I want to be insanely prepared. And the last thing I want to do is be short already and not feel like I can add or feel like I'm giving my gains. Because remember, on this short where I did cover, I was short from I think like 6, maybe 5 average. And so it would feel really silly to still be short from that average, watch it go from 1 to nearly 4, and not feel I can add because I'm still short from 6, and now it's practically getting there. It's like I would be more in a state of fear than in a state of aggression. And so I'm really happy I covered because lo and behold, it did that, right? It had a huge move from 1 to mid 1s and then gapped up to 3, gapped up to 2 and ran to 3, and then it gave you a bigger gap. I know it only opened up at 420, but it gave you a gift of a gap up. I think it touched 5, right? If I remember correctly. Can we even see it? No, I have to go back to. I got to keep checking the dates if it's a month back. Oh, now we're loading up here. Hold on, guys. Here we go. Right, this is December. And actually, we talked about this trade. I think we already did in the December recap, so maybe I'm just repeating myself, but I want to just show you the gist of it real quick, because what happened after is what gave me a lot of conviction to take the short the next swing.
Okay, I just want to point out, because I've reviewed this guy before, so this is a trade that I reviewed of his. Lost $380,000 in one day. So let's take a look at this.
I did that first trade. It was well over 120, 150 grand loss already, right off the bat. And so this is multitudes bigger than a 50K max stop. Okay, so lesson is, and this is why it hurts so bad, for me personally, is because, again, I thought I had the discipline. I thought I was better than that, but I'm not. I've always accepted that I'm human, obviously, but I truly realize now no matter how well I think I can be disciplined, the reality is I have to give it up to someone else's hands, which is a broker. Someone who isn't emotionally tied to any given trade thesis or reasoning to being in a stock, okay?
And this is a guy who regularly makes 6 figures from. So that's his equity curve over 4 years, okay? So this is him showing that you can lose 380 grand in one day. And that was a while ago. So you can see that he learned his lesson. And then he's getting back in there and trading this thing again after having taken the loss and learned from it, which is awesome.
This was the entry. So again, started a little bit here, added a little more up here, took some more size up top, but then cut a little bit of extra because I just realized now I'm finally doing the math as I'm scaling in more seriously. And I'm like, hey, these ads aren't bringing my average up enough to justify the new risk I would risk at the highs. So I cut it a little bit there, downsized just a bit. Same thing here. This one was at Cobra versus Centerpoint. And again, this was the worst part of it. It's like I just started in on probably about 30, 40% of my size. But again, by the time we're adding up the other broker and then doing the math, it's like, oof. I would have loved to have just taken, let's call it 1 arrow instead of 3, roughly, like 1/3 of what I actually took. And then I could have saved that for at least, 3, the mid 3s, if not the high 3s. Because again, this high, I know it was scary in the moment, but that actually was the high. Because the very next day it gapped down to mid 3s. And the day after that, that's when you see this panic now from 3 all the way down to 220-ish, to low 2s, 230s, and then that's the fade that started. And then once it got to 150s on this day, which was that Friday, I believe, I covered it all for a 90K profit. So yeah, that's this day on the 10th. So very, very big gain for me. Again, risk reward wise wasn't tremendously great because again, I put a wide stop on the highs to start up here. But again, that was intentional. That was not unintentional. I knew there was a world. I didn't expect it to per se. Like I said, it was kind of caught me off guard that it even bounced into the high 3s to begin with. But I knew it was preparing it open for that possibility. And so I knew the risk on the highs was the best chance I had to let this finally roll over and then get a really sick fade back to where, the run started. So very, very good big cushion to the month there with a 90K profit.
90K profit in one trade. And what's the key? Risk management. Okay. So we've got all these setups, right? We've got all these setups. But if you go to his risk management, you can see he's maintaining his risk to reward ratio and it doesn't dip below 1. In fact, he's maintaining something like a 2 to a 3 when it comes to either like 1 to 2 risk to reward or 1 to 3 risk to reward ratio. And he's managing his losses. He's setting a stop loss. Did you hear that? He's setting a stop loss and he is not over leveraging, right? He's not going reckless with the leverage. So although he's sizing up aggressively, he's still got the strict risk management. And then what you can see is that he's respecting his risk management rules and applying discipline, which is the key.
Then we go into week 3. This was really cool, but again, this probably was all due to Fannie Mae, where I just had 3 back-to-back days of 50K each. We go into those days. Let's see here. First one was, again, another breakout on Fannie Mae. So, like I said, I sold my 50K profit into this day towards 5. It wicked down to the downside. Never rebought it. I did take a small, I believe, loser on this day, the 10th. Because if we go into it, right, there's now a new breakout level of what is this 525. It did try to break out over it, but then it was actually quite choppy this day. If we just go into it, let's show you here.
Okay, so just to recap the setups, right? Let's get back into those setups. So these are his key setups. He's got the bull breakouts. He's got shorting parabolic moves. He's got the panic dip buy. He's got the first red day, which we'll see coming up. And then he's got this gap and crap.
Fail.
So this one's just a breakout entry, which is bullish. Just choosing something that's bullish like this and then waiting for a breakout and getting long.
And so by feel, I mean not hold above the breakout strongly. And so once we kind of pulled back midday like this, especially below 520, we're at double bottom in the morning here, I said, no, this isn't it. Let's just sell, take a small loss and recoup. So I lost like 3K or so, very, very small, which was great. But then again,
keeping the losses small, right? Keeping the losses small.
It does come back. And the next day it gaps up over the breakout level. In fact, we actually slightly gap up in the morning spike over the previous day's high. So now instead of the breakout being 525, you could kind of argue it's now 540, but again, that's not really a breakout. That's just a continuation of the next day and having the first day of the real breakout be more of a shakeout. And so that's when I realized, hey, this still is strong. This is still going up. It just might not be at the pace that I was used to. But again, the fundamental thesis, the swing idea, the daily chart, everything about it was like, hey, there's still a bullish reason to be long. I just need to adjust my expectations and adjust my trade plan. So instead of feeling...
Okay, so I really want to point that out because you can see that throughout all of his trades is that he's able to adapt as he's in the trade, right? So he adjusts his position size dynamically based on the trade quality as things are moving, right? He's got this adaptability during the trade, which I really want to highlight. If you are expecting things to stay the same always, they're not going to stay the same because trading is dynamic and it's always changing and you're in an extremely dynamic environment. So what he's able to do is move with the changes, which is the mark of someone effective. If the trade doesn't do exactly what you expect, can you adjust? And the answer for Kyle is yes.
Like I needed to stay exactly in for the breakout level, I decided, hey, we're going to rebuy this at like 540. We're going to risk down to $5 or at least this low of like 506, right? And no matter how long it takes, we're just going to stay long. Okay, it could take another week. It could be a grinding like action like it happened in November, right? I was almost expecting like, hey, it might give us something like this where I have to hold for at least a day or two or even 3 for the run to really start to get going. And so you do kind of have that. You have 2 small days where, again, I stopped out for 3K loss here, rebought on the 13th, and then I got rewarded that the very next day was the huge speed up. And so if we go into it, all right, let's go back to the intradaily. The speed up happened just much quicker than I realized. I mean, before you know it, within an hour in, or not an hour, and I guess almost 2 or 2.5 hours in, this looked like a parabolic to me. I mean, I was all out at this point by, if we just look at the trades. Again, let's get rid of that's my covers there on the 150s. So yeah, this is me buying, right, when it gapped up to 540 over the previous day's highs. And then by the speed up, I mean, I started selling some at 6. Whoops, let's go here. All right, I started selling some at 6, some at like 6:30, because again, if you go back, sorry to keep going back and forth between the daily and the intraday, but if you go to like a 10-year chart, we have to go further, we gotta go 20-year. Can't believe it's been around this long, but the all-time high of this being on the OTC market, yeah, there we go. You know, it's always topped out. Like this top is at 4 low 4s, this one is right at 5, this one's at 550. This height right here is like 636, 635. And so you could argue like this was a massive multi, 5 to 10 year breakout. And so when it got there and when it went there, I started selling some more because I'm like, hey, this is a big level. I kept a small piece left just to see how well and how you can go. And of course, 30 minutes later, I mean, we're going parabolic. And so at that point, I sold the rest, locked in, 27K.
Remember when I said extreme is not sustainable? So he knows that one of the ways that you can tell if a move is extreme is by the slope of the line. This is something you could teach a 5-year-old, right? Look at the slope of the line here. Look at the slope of the line here. Okay, it's kind of sideways. And then notice the slope's going up, and then it's going sharply up here, okay? So when the market starts going almost straight up like this, okay, then that's when you know you don't know, but it's very possible that we could be making a top, right? Because if it gets parabolic like that, that is probably a climax. You know, the big blast at the end? Yeah, okay, so that's what that is. And so he knows what the big blast at the end looks like, and he's like, okay, I think I'm gonna start getting out here, and this is when he got out. That was his last exit, okay? And look at the timing on this was excellent, right? Like, the top was here, and then it just went sideways after that.
On this breakout long. So again, not as big as the first one, but still a big long trade gain nonetheless. And actually, sorry, I didn't mean to close that out, but we'll pull up this chart here. Once I sold, I then started getting more serious about the parabolic. I said, hey, this is getting pretty overdone pretty quickly. There's a world this can pull back.
Overdone, okay? So that's what he's calling parabolic, overdone.
Back, you know, I was thinking 650, maybe even get ugly down to like mid to low sixes, down more here, below 650. And so I start shorting, and I'm actually pissed. I could have swore I took a
okay, and then he flipped to short, awesome.
Screenshot of it, but I didn't. But I wish I had it because you could have seen how bad it was. One, because obviously you notice how the price action, the parabolic did not really take place like it should have, right? This was much, much stronger than I ever could have imagined. Again, I thought conservatively there could have been a good panic down to 650. But that just didn't happen. In fact, it held very, very well in the high sixes, actually made a new high, tried it again, and then still tried to make like a double top. And then finally it made this low. And
now guys, this is a wedge top, okay? You can see this on every chart. You can see some of these, okay? You've got a top here, you got a top here, and then you got another top here. It's also a head and shoulders because this top is below this top, okay? So it kind of looks like a dude with two shoulders and a head, right? Because the middle is like higher, right? You imagine, right? Like shoulder, head, shoulder, okay? So it's a head and shoulders top or a wedge top, and then that's often a sign that we're going to reverse to the downside. And then he started shorting, and then this combined with this extreme parabolic move up to the upside, right, is a trend climax. So you put these little pieces together like little Lego blocks. Okay, parabolic move up, that's exhaustion. It's probably going to get exhausted, okay? So we've got a climax, and then for confirmation, we've got a wedge top, which is the market saying, the bears trying to reverse the price 3 times, 1, 2, 3, and then finally cracking down and getting that lower high, which would be here. Okay, so this is the first lower high because this high is below this high, which is the last shoulder of that head and shoulders top, and then we start to move down, and that's when he's shorting.
Even then, it couldn't even get to 650, and so I wasn't even there for this. I gave this like 1, 2, I think 3 tries about all of this. Only ended up losing, or I ended up losing like 20K or something, so gave back most of that 27K profit from the breakout. And so that was really frustrating because again,
oh, okay.
As much as there's a strong fundamental thesis behind this, as much as there was much of buying, you'll seem to notice here quickly, especially when you go into this red day, like it's still an OTC. There's still a great amount of panic that can happen when you get that momentum to shift. And I thought that was going to happen on this parabolic. It didn't, so it led to a slightly bigger loss than
Okay, interesting. So this was that head and shoulders top, and then we started to move down, right? We didn't get much of a move down, and then we just went sideways, 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 and then it actually made another move up, okay? And then made another top here, and then we finally got the push down.
I wanted to after giving it 3 tries. However, the overall gain, because my broker at the time, or not at the time, Cobra, will connect trades when I take a long and a short. Obviously, I was down 20K on the short, but then I decided, I looked at how just insanely strong this was, consolidating beautifully at 7. I thought to myself, like, hey, I know this is extended, but this looks really good for a gap up, and I'm going to take it long overnight again. I just am, right? I've seen it many, many times. Again, when you look at a run up like this, I've seen too many OTCs where when they're this kind of strong, when there's this level of strength, your chances of a gap up are pretty damn high. And so I actually then took it long at like $7 right into the close here, looking for a gap up, and that's exactly what we did. Or that's exactly what happened. So let me just show you. Yeah, like right these last 15, 20 minutes here, got long, and these are the sells. Right, so I'm very annoyed. I could have swore I took a picture of the parabolic and then the buy at the end. But then these are the sells of me selling long. And so did I make my all losses back? No, I ended up losing like 3K total between the parabolic short and the long. So call it losing 20K, making 17K or something along those lines. But just wanted to share that because unfortunately it is my trades are literally combined, but it's kind of 2 trains in one there, unfortunately. But anyways, that's the sell on the long side. And then once this really died, I thought to myself, okay, now we're very similar to what I thought the parabolic would offer. Is like, if once you get momentum to shift, it doesn't matter how strong the fundamental thesis, the underlying stock where it's going to be in 6, 12 months from now, whatever. You get enough longs who are over their head or in underwater, you get a panic. And so I was then starting to short this for a first red day. At first, it was a little bit choppy, right? If we just go into like...
Okay, so this is his first red day strategy, okay? So finally we get to this. So the first red day strategy, he looks to short multi-day runners on their first red day. So this is when something's bullish, and it's been bullish going up for multiple days, okay? That's what we're calling a runner. And then the first red day, he's looking for a weak open with a red-green rejection, heavy selling volume, and a breakdown of key support levels, okay? So basically just trying to get a quick move to the downside on a bullish stock that gets his first red day, which is kind of like saying panic attracts panic. Fear attracts fear, and it does.
The real red day panic, I should say, reality sets in that like, hey, this is going to have a red day. And so then I started covering most of my size into the 650 and below mark. Ultimately ended up making about 45K on the trade. And again, this is one of those trades I was talking about in the beginning of the video where it's like
45K, cha-ching. Okay, so he gets short here. Looks like he takes some profits here, gets short again, gets short again, gets short again, takes some profits here, takes some profits here, takes some profits here, takes some profits here. Nice.
I wasn't taking massive, insane A+ sizing. I took about an A grade risk for me, which at the time was around 14, 15K.
Okay, and that's the other thing I want to point out. Can you hear this? Can you hear what he just said? He's focusing on key setups. So he knows what he's entering on. Okay, he's got all these patterns and he's got all these early signals that he's looking for, these key signals rather, and then he's adjusting his position size dynamically based on the trade quality, which is very key, right? He's looking at this setup and he's saying, based on what I can tell about this setup, I'm going to adjust my risk appropriately.
And I made a good 3-to-1 risk reward, and so all of a sudden that turns into a 45K winner, right? What once was a 45K winner for me was massive, say even a couple years ago, is now starting to look like an average 3-to-1 trade, which I know is crazy to think, but again, it's simple math. It's like 15 times 3, 3-to-1 trade. It gives you 45 grand. That's kind of how scalable it can get when I'm starting to risk money that is big. 15K is no joke, but then again, when you start doing the multiplications of like how the risk reward can play out, it opened my eyes to like how big and how scalable trading can get, which again, why I kind of mentioned at the beginning of the video where, it just gets scalable very quickly. And so this is that perfect. This trade was that best realization for me of this month of like, holy crap, I just made nearly 50 grand. And it wasn't some incredible breathtaking trade. It was like an A grade trade, which is not that rare. So that was really, really cool.
Patiently waiting for A+ setups, just like we pointed out yesterday with trades by Matt. If you haven't seen that video, go watch it. Okay. Now Matt did 300 grand in 80 trading days, 80. This guy's doing 300 grand in 1 month, which is like a fraction of that. But you see some similarities with these very successful, very effective traders, which is that they are patiently waiting for A+ setups and they know what an A+ setup is. And then when they see it, they take it.
Now, going into the next day, this wasn't also an 18K winner. This was, I would call this a second red day. The second red days are not necessarily as high odds as the first, but again, you'll...
Okay, so this is a little modification on the first red day strategy, and this will be the second red day. Got it.
Look at a daily chart, and sure, this first red day was great.
Okay, so look, this is what he means. Okay, so you got a bullish, you got bullishness, right? You have this strong bull trend, right? Boom, breakout to the upside, pull back, making a higher low, another breakout to the upside, and then he's saying, okay, the first red day will probably be followed by some more selling, and that's the setup.
Great. We're still up from 2 or 3 in a couple weeks. There's definitely, I went in today knowing that there's a very high likelihood, or not high likelihood, very good chance that like, hey, this could go higher, but in the event it shows action, then it won't. Like, there's a pull waiting to happen at least to these 5s, which is exactly what it did. And so we go in there. And I wasn't even early. Like, I wasn't even trying to be predictive or predict it happening. I was very reactive. I said, hey, if this doesn't even go red-green, I'm not going to short. If it goes red-green, then I will just get short. And then if it panics, it does. And if it doesn't, then I stop out. And that's exactly what it did, right? Out the open, had a small gap up from like 620 to 630. Tried to spike into the 640s, which ended up being quite the resistance level.
Pop quiz, because I want to make sure you guys are listening and you're here to learn something. True or false? True or false? Put this in the comments right now. True or false? This trader emphasizes reacting to the market instead of predicting it. True or false? Is it true or false that he emphasizes reacting to the market instead of predicting it? Put that in the chat right now. I want to make sure that you're here to learn something and not just be entertained.
Mid to late day yesterday. So couldn't make anything happen there, couldn't get enough strength. And then the panic actually started, got short really close to like 620. And then again, just covered into the mid 5s, even the side of the low 5s. Made another 18 grand, right? Here's that. Let's go to that first red day. All right, Fannie Mae day 2.
Okay, so we're hearing from people. Ratatata Probs is saying false, and Zin is saying true. Arpon is saying true. The answer is
right. Just waiting to get short red green.
True. Okay. So what he does is he reacts to the market instead of predicting it. Now, this is a common mistake of beginners. Beginners think that traders are predicting, but they're not. They're using probabilities. Now, there is a nuance. There is a tiny nuance to the difference between prediction and probability, but they are absolutely not the same. And all he's pointing out is that he's emphasizing reacting to the market instead of predicting, which means he is not predicting. Okay. It's forecasting, which is different than prediction. It's using probabilities and math to assess what is most likely to happen, meaning what's more likely than not, but it's not exactly predicting.
Small covers early on, and then just cover the rest into the pools, and 18K from there. So this was more of a 2-to-1, given that I was risking a little bit wider, or wider for how much the range offered it, just because again I would rather be late and right than early and wrong. And again, I think I covered a little bit too much on this first.
That's a great write or downer. I'd rather be late and right than early and wrong. That's something you write down. That's a lesson we're taking from this guy. Okay.
First candle. Whereas if I held that towards these, it would have been maybe we're 3-to-1. But again, risk 9K, made 18. So again, another example, maybe on a smaller scale of like even a 2-to-1 trade can result to a really healthy 5-figure gain. So that's that. Next is DJT. So DJT, I had the thesis on this that this was going to run up into the inauguration, very similar to how this ran up into the actual election, or the voting election of either Kamala or Trump. Now, obviously, and we can say this in hindsight, it did not run nearly as well, but it did run actually a little bit. And so I longed this a little bit early, and it gave me a pretty crappy entry. I got long on the 6th at around a 36 average, and so for the first 2 days, it pulled back, and I started questioning. I'm like, am I too early? Is my thesis dead wrong? What's going on here? But again, you see this like multi-level hold of for the past really month, this like 33 level, at worst case like 3250. Very good multi-week support. And so I thought to myself, hey, if we're not...
Okay, so we've got bullishness, right? And then he's assessing the bear case, right? He's saying, if I'm long, let's look at how strong the sellers are. And you can tell how strong the sellers are by looking at the bear bars. Notice that the bear bars have tails on the bottom, right? And that they're only getting 2 consecutive. If you want a really simple strategy to assess which side is more likely to have control, just compare the streaks, which means look for consecutive candles. Consecutive. Bulls got, and look at it as points on a scoreboard. 4 points on the scoreboard for the Bulls, 1 point on the scoreboard for the Bears. So Bulls 4, Bears 1. Bulls 2, Bears 1. Bulls 4, Bears 3. Bulls 4, Bears 2. Bears 2. Bulls 2, right? So you see that even though the Bears are getting some points on the scoreboard, they're still pretty weak. So he's looking to get long, and he's getting long because he's seeing that the sellers are weak.
I'm not gonna even break those levels. Yes, I'm early. Yes, I don't have a great entry, and maybe I'm too early.
Now, what's the lesson there? The lesson is if you're trying to enter a trade and you're trying to do it like a professional, which means with data, not hope, you have to use the data and put the data together and exercise counter logic, okay? So what are the buyers thinking and what are the sellers thinking? And you compare the bear and the bull case, buyers and sellers, and then you say who's strongest, and then you make your decision.
General, or it never happens, but like, just play dumb, stick to the risk level, and if it works, it works. If it doesn't, it doesn't. And so,
I love that. Play dumb, stick to the risk level, and if it works, it works. If it doesn't, it doesn't. Now, you see this amongst the best traders. They're neutral. They follow their process, and then they're neutral about the outcome. That's another thing to write down. Follow your process, stay neutral. Follow your process, stay neutral. Put that in the comments right now, okay? That is my favorite lesson so far.
Exactly a week before, but that's when the run started. That's when we really started to get going. That's when I did add actually shares, and we can pull it up here. So here's the first early on the 6th, right? Just randomly buying consolidation, thought it was holding pretty well, but again, the next 2 days it sells off. Here's that big day where once we've proven like, hey, we're working here, holds this 38 level really, really well. I then add some shares. I think I bring my average up to like 37-ish. Pretty much was going to risk like this low for a break even, and then we just keep going, right? We make our highs all the way to 43. We close at like the mid 42s. And frankly, I thought, okay, great. This is the move I was looking for. And my goal was to sell like 45, 50-ish, right? If we could just sell in this range somewhere back up into this resistance level, I would take it, no questions asked, wouldn't even hold through or two up till the inauguration. I was going to take it. Unfortunately, it then led to a really choppy next 4 days. It just could not get going. It slightly broke out here on this day. but I actually did get stopped out before I even can make that. And of course, the inauguration then took place. And even then, for not running up as much as I thought it could, it was still a sell the news event, and now it's back down at 30. So, how did I get stopped out? I eventually started playing the game of like, hey, I'm just going to risk every previous day's low. And so, unfortunately, this day when it pulled all the way back down to 38, I was like, hey, I'm kind of giving a lot of gains back. But again, I had a little conviction that it was going to keep going. And so after this day, I moved my risk to 38. After this day, I moved my risk level to 39 or 39.5. And after this day, I moved my risk level to 40. However, this choppy ticker stopped me out literally in after hours. Quite the insane move. I don't know. I couldn't tell you why. I thought there was negative news that came out, but again, pulled back into the close, which wasn't the healthiest. But again, this has been many big pulls all throughout this period, so this wasn't anything huge or concerning per se. But then after hours, it just totally rug pulled everybody, and so I did stop out under 40, only for it to come back and then still break out and still get back over 43 the next day. So that was frustrating. But again, even if I was still long, I would still have my risk on 40. And again, by late day, it stopped me out anyways. A huge fake out. Went back below 40, and then the next day, once the inauguration took place, it really sold off back down to pretty much my entry of 36, 37. So, not every day you can have a trade like that didn't work, but still make 5 figures, right? So that was cool. That was awesome. Next, also Fannie Mae. This is the last Fannie Mae trade, guys. So if you're getting annoyed by Fannie Mae, don't worry. This is the last of it. Let's go back to the daily. So after that second red day, it had a massive green day. Massive green kind of day bounce back to the highs, or roughly around 7. I did not partake in this move. I frankly didn't think it was going to be that strong. It was much stronger. I thought by the morning, if we go back to the intraday, it had a morning move to the mid 5s, I think. And so this ended up being a 10K winner on the gap and grab side. So that was really cool. And I think that's the trade here. Yeah.
Selling short here, betting on the price moving down after, look, this climax. And again, you've got a wedge top here, and then you got a strong bear breakout. Notice that his entry was right after this very strong bear bar closing on its low. He gets short here, and he rides it all the way down, and he exits here, and then exits some more here. Nice trade.
I think this was the 29th, right? This was a Wednesday, right? Yeah, Wednesday. I remember specifically saying on Go to NASDAQ, like someone saw me we did this trade live. Someone saw me get short here, and they were like, I'm going to paraphrase it, and I agreed with them. I was like, Kyle, this entry's terrible. Like, is your risk reward barely 1-to-1? And I go, yes. Yeah, yes, it is. And unfortunately, the way I approach them is not necessarily the most kindest risk reward wise. Certainly not entry. Sometimes it looks terrible that I'm chasing, like clearly getting short after this momentum. Sometimes will majorly bite me in the ass. But there's other times, again, kind of random, where OCEA, I'm getting short, and then by the second half of the day, it's like, holy crap. Like, a hindsight bias would have said, man, I would have loved to get short anywhere up here. I'm just kind of closing my eyes and trusting the process of like, I'm just gonna get short anyway, and find out, right? That's what happened here. That was really cool to see.
Look at it. A winning day for him is 50,000. A losing day is 8,000. Look at it. Let's look at his red days. Okay, look at them. This is over the course of a month and a few days the next month. Okay, January and February. $8,000 loss, $6,000 loss, right? Okay, $8,000 loss. Now look at the size of the green days. 16,000, 14,000, 50,000, 60,000, 54,000, 50,000. Okay, if you're Danny Trades, that is not how your P&L looks, right? If you are mastering risk to reward ratio and average profitability per trade, then this is how it looks. Your average winners are 1, 2, 3, 4 times the size. Maybe even 5 times the size of your losers. That's what effective trading looks like. And if you are working on making your trading more effective, which I'm sure you are, as am I, which is why we're all here, then we want to get better at making our average losses smaller and our average wins bigger. And that's how you increase your profitability. So let's do a very, very quick recap. These are elements that every effective trading strategy needs. First, you need to know what mindset you're going to approach this next trading month with. What is the mindset shift that you are going to make? Now I'm talking to you. What's the mindset shift that you're going to make this month that's going to make the difference? What is it? Okay, Zavid, you're very welcome. But the question is for you. What is the mindset shift that you are going to make this month in February that's going to change the game for you? What is it? What do you know that you need to make a difference with? Okay, is it getting started trading and finally going from watching videos on YouTube to putting your ass on the line and actually being in a trade? Okay, or is it you've been trading for a while and now you need to learn how to respect your daily loss limit better? What's the mindset shift? Okay, that's thing one. Thing two is, what's your risk management look like? Are you maintaining a risk to reward ratio that is better than 1? Are you maintaining a risk to reward ratio that's 2-to-1 or 3-to-1? What is your risk management protocols? And are you having the kind of discipline you need in order to honor them and respect them? Because that's what trading is about more than anything. It's about risk management. Now, I know you don't want to hear that, but it's the truth, and I'm here to tell you the truth. I'm not here to lie to you, okay? Key metrics. What are your key metrics? Do you know what your win rate is? Do you know what your average loss is? Do you focus on high quality setups? How do you do that? What are your key setups? So my man Captain Crunch said, for this month, February, he's going to focus on more patience and more discipline. Excellent. Now, what about the rest of you guys? Post it in the comments right now. And what are your key setups? Okay, this guy has these outlined. He's trading bull breakouts. He's shorting parabolic moves up. He's got the panic dip buy. He's got the first red day. He's got the gap and crap strategy, okay, which is shorting gap ups, expecting that breakout to fail. All right, what are your key setups? If you want to know my key setups, what you can do is go to tradesbybren.com and get my 3 favorite setups, and I give them to you for free, and I share with you the 3 favorite patterns that I look for, how I set my stop loss so I can limit my risk, and how I take my profit so I can get out before it's too late. Just go to tradesbybren.com or hit the link in the description. What about you? What are your favorite trade setups, okay? And what are your risk management and execution tactics, right? What are your risk management and execution tactics, right? For him, it was sizing up more, focusing on key setups, adaptability during the trade. I highlighted that one because that one's difficult and it's amazing. And are you doing monthly trade reviews and having the kind of discipline it takes to do that? Are you? Because I'm be willing to bet that you're not. What would change in your trading results if you were willing to review every single trade that you took all month and look at every single one with screenshots, deep diving into what you did well and what you need to improve? How would that change your results? Continuous improvement, okay? Monthly recaps for 5 years with this guy, okay? That's something for all of us to learn from, okay? And then he plans to increase his risk levels incrementally each month. Now notice, incrementally is the key there. You slowly increase your risk. That's how you do it properly. And he's focusing on seasonality. He knows which months tend to be good for trading, which months tend to be not, okay? So the summer months tend to be a little slower, and he knows that, okay? And then this is my favorite part, and this is the thing that everybody needs to focus on, in my opinion, Kaizen. You guys heard that term? Kaizen? It means commitment to refining your process over and over and over again, right? Refining entries, scaling, and risk management, okay? Now, what does Kaizen mean? This is what Kaizen means, okay? So this is, to me, the biggest takeaway, okay? Because this guy, like I said, for 5 years, he's been doing these monthly recaps. Of course you're gonna get better. Of course you're gonna get better. And I've watched this guy for 5 years make more and more and more money, okay? So Kaizen means changing for the good, okay? So it's a Japanese thing, and here's how the process works, okay? It's a circle, and here are the steps. You identify the problems, right? For us, we're gonna say S because we've got multiple problems in our trading, okay? We're gonna analyze the problems, okay? And then we're gonna develop solutions, we're gonna implement the solutions, and we're going to review, adjust, and standardize. So that's Kaizen, and that's what this guy's doing. And if you do that, I don't care what you're doing, if you do that, whether it's trading, whether it's relationships, whether it is fitness in the gym and trying to lose weight, if you take these 5 steps and apply them, you will be unstoppable. Can you tell I'm fired up? Can you tell I'm fired up? Okay, I just love seeing traders win because trading is enormously difficult and it will absolutely destroy you if you let it. But this guy overcame. So I'm deeply inspired by Kyle. And Kyle, thank you for sharing so openly. It's very rare to see that. So big props to Kyle. Like I said, you can head to tradesbybren.com to get my 3 favorite setups. Hit the like if you liked it. Subscribe if you want more. And next up, I recommend you watch this video on your screen right now. Click or tap on the screen to watch that, and I'll see you there.